Welcome to a deep dive designed just for you. Today, we're cutting through the noise and digging into the financial pulse of a really critical player in India's digital future, Railtel Corporation.
That's right. We're zooming in on Railtel's unaudited financial results, specifically for the first quarter of their financial year 2026.
Right, the quarter that wrapped up on June 30th, 2025.
Exactly.
And we've got their official statements, plus that limited review report from the auditors. So our mission here is basically to unpack these numbers.
Yeah, see what's driving performance, which bits are growing.
And just give you the clearest takeaways about their financial health this quarter. It's about connecting those dots, between the big picture and the nitty-gritty. Okay,
Yeah.
let's unpack this. Let's kick things off with the headline numbers. What's the sort of overall financial story Railtel is telling us for Q1 FY26?
Well, looking at the top line for the quarter ended June 30th, 2025, Railtel reported total revenue from operations of 74,381 lakhs.
Okay, 74,381 lakhs.
And maybe just a quick note for you listening.
Yeah.
When we talk numbers today, we use lakhs. That's an Indian unit. It represents 100,000.
Right. So just for context, 74,381 lakhs. That's over 7.4 billion Indian rupees. A significant number.
It really is.
How does that stack up against the same time last year? Was there, decent growth?
Oh, absolutely. More than decent. If
Yeah.
you compare it to Q1 of FY25, revenue then was 55,811 lakhs.
Okay.
So we're looking at a pretty remarkable year-over-year increase,
Right.
nearly 33%.
Wow. 33%. That's quite a jump.
It is. And this positive trend, it doesn't just stop at revenue. It flows right through to their profitability as well.
Okay, so how did that impressive revenue growth actually translate to the bottom line? What are the profits telling us?
Right, so their profit after tax, PAX, that's the net income after everything's paid,
Mm-hmm.
that stood at 6,610 lakhs for this first quarter, Q1 FY26.
And compared to last year?
That's up from 4,867 lakhs in Q1 FY25. So again, it signals a really strong upward path for profitability. We also see their profit before tax, the PBT, hitting 8,931 lakhs in Q1 FY26 compared to 6,678 lakhs last year.
So strong growth for tax, too.
Definitely. It's worth just mentioning there was a small impact from what they call exceptional items.
Yes.
A negative 342 lakhs. These are usually, one-off things outside the normal day-to-day business.
Got it. So a minor adjustment there. Now, for you, the individual shareholder, this often comes down to earnings per share, or EPS. What's the story there?
Good question. Their EPS, both basic and diluted, for Q1 FY26 came in at 2.06 rupees.
And how does that compare?
That's a healthy step up from 1.52 rupees back in Q1 FY25.
So taken together, revenue up strongly, profits up strongly, EPS up. It really paints a picture of a robust start to their financial year, doesn't it?
It absolutely does. Strong start, strong returns for shareholders implied there.
Okay, here's where I think it gets really interesting. Railtel isn't just one single thing, right? They operate in distinct business segments.
Exactly.
So which ones are actually fueling this growth? How did they perform individually?
They primarily report under two main segments, telecom services and project work services.
Okay, let's start with telecom services. That's kind of their bread and butter, historically speaking.
Sort of, yeah. It's their more traditional offering. For telecom services, the revenue in Q1 FY26 was 33,476 lakhs.
Okay, how does that compare?
It's a solid, steady increase from the 32,777 lakhs they reported in Q1 FY25.
So growing, but maybe not explosively.
Exactly. And the profit from this segment, before tax and interest, was 6,879 lakhs in Q1 FY26, up a bit from 6,584 lakhs the previous year. It shows, consistent, mature performance, reliable income generation.
Right, consistent, steady. But that doesn't fully explain that big 33% overall revenue jump we talked about.
No, it doesn't.
So that must mean the action is really in the project work services segment. What did you find there?
This is really where you see the acceleration. The project work services segment reported revenue of 40,905 lakhs in Q1 FY26.
Whoa, okay, wait. 40,905 lakhs. How does that compare to last year?
It's a massive jump.
Yeah.
In Q1 FY25, it was 23,034 lakhs.
So that's almost a 78% increase year over year.
Precisely, an almost 78% increase. And it's not just revenue. The profit before tax and interest for this segment also saw a dramatic rise.
Let me guess. Substantial.
Very.
Yeah.
It went from just 958 lakhs in Q1 FY25 up to 2,160 lakhs in Q1 FY26.
Wow. So just to recap, project work services didn't just see the highest growth, it actually contributed more revenue than their established telecom services this quarter.
That's exactly right. It's a really key point.
That really stands out, doesn't it? I mean, does this suggest maybe a strategic shift for Railtel? Are they really leaning into India's big push for new digital infrastructure projects?
I think it strongly suggests that. You look at the stark difference.
Hmm.
Steady, mature growth in telecom versus this, well, explosive growth in project work. It really indicates they're successfully tapping into government initiatives, the huge demand for national digital infrastructure.
So it's more than just numbers, it's potentially about their evolving identity.
I think so. It shows where they're finding significant new opportunities.
Okay, so beyond the quarterly income statement, which is looking impressive, what about their overall financial footing? Assets, liabilities. What does the balance sheet tell us about their longer-term health?
Right. Looking at the balance sheet as of June 30th, 2025, Railtel's total assets stood at 4,080,169 lakhs.
Okay, significant assets and liabilities.
Total liabilities were 2,073,694 lakhs.
So doing the quick math, assets comfortably exceed liabilities. What does that tell us about their stability and maybe their capacity for future growth?
Well, it indicates a pretty robust financial structure overall. Their capital employed, which is basically the total money tied up in the business, stood at 2,006,475 lakhs as of that date.
Right.
So yeah, these figures paint a picture of a company with significant resources, a solid balance sheet. It gives them a healthy foundation to potentially take on larger contracts or, invest in new tech down the line.
Makes sense. Okay, finally, we know these results are technically unaudited, but they have undergone this limited review. What exactly does that mean for our understanding of these numbers? Are there any caveats we should keep in mind?
Good point. So a limited review isn't a full deep dive audit. Think of it more like a thorough health check on these interim quarterly figures.
Okay.
Mrs. Lunawat and Co., the chartered accountants, did this review. And their report essentially says that based on their review, nothing jumped out at them to suggest the statements are materially misstated or that anything required wasn't disclosed.
So it gives us a reasonable level of assurance.
Exactly. Reasonable assurance, but it's less comprehensive than the full annual audit they'll undergo later.
And were there any specific aspects of that review process itself that are worth highlighting for you listening?
Yes, there was one specific point the auditors noted. They mentioned they didn't directly review the financial results or information from 3 of Railtel's main operating branches.
Oh, which ones?
The Eastern, Western, and Southern regions. For these specific branches, their review relied solely on reports provided by other branch auditors.
Okay. And are these regions significant?
They are quite significant, yes. Together, they represent a large chunk of the business, roughly 57,430 lakhs in revenue from operations for the quarter.
Right.
About 8,369 lakhs in profit before tax, and around 3,019,194 lakhs in total assets.
So a big piece of the pie. Should that worry us?
Not necessarily worry. It's actually a very common and perfectly acceptable practice for large companies with multiple decentralized operating units to rely on these branch-specific audits for interim reviews. But it is an important scope limitation to be aware of when you're looking at these overall unaudited results. It's just part of understanding the context of a limited review.
Got it. Transparency is key. So let's bring it all together. What does this all mean for you, our listener? What are the main takeaways from this deep dive into Railtel's quarter?
I think the overriding takeaway from Railtel's Q1 FY26 results is really a powerful story of strong growth, especially spearheaded by that project work services segment.
Yeah, that really jumped out.
It did. And all this is happening while they're maintaining a stable and pretty healthy overall financial position. Those big year-over-year increases in both revenue and profit, they really suggest a company that's not just expanding, but is actively seizing opportunities.
Particularly opportunities within India's fast-developing digital infrastructure landscape.
Precisely.
And understanding these reports, even just the highlights and the sort of story behind the numbers, it gives you a real shortcut, doesn't it, to getting informed about a company's health and direction.
It does.
Especially one like Railtel, which is so integral to the country's digital backbone. It helps you connect those dots between the big economic trends and how specific industries are actually performing on the ground.
Absolutely. And, this actually raises an important question for you to think about.
Oh,
Yeah. Given Railtel's really impressive performance in project work and knowing how critical their role is in India's digital infrastructure, what kind of future projects or expansions might these strong results actually enable for them in the coming quarters?
Good question. Like, what could they do next with this momentum?
Exactly. And how might that, in turn, further shape the country's ongoing digital transformation? It's
Yeah.
definitely something to mull over as you continue your own deep dives.